Okay, check the answer to homework question. 3 questions I have given for homework question 4, 8 and 10. So first say question number 4. Mr. Shiva, age 58 years. 58 years does not make you senior citizen, okay? Has a gross total income of 7,75,000 comprising of it includes income from salary and income from house property. But they are not given the breakup. So it's okay, we will start our answer directly with gross total income. See, in the statement of total income, actually we want to write 5 heads of income. But since they are not given the breakup, we will directly start with gross total income. Okay. And then he has made following payments and investments. Have you noticed one thing? Most of the deductions are because of some payments or investments. Can you tell me some deduction which are related to income? Where there is an income but deducted? ATTTA, TTB, and sometimes employer contribution. It becomes income and deduction. Then in ATC also interest on NSE. Means I am talking about certain items which are first treated as income, then deduction. But they are less item. But most of the deduction item are investment and payment related. See why I said this, because see here what they have written. He has made following payments and investments. And mostly all the deductions are for payments or investments. Except few which I said right now. So first point is what? Premium paid to ensure life of her major daughter. Major daughter. Is major daughter allowed? Yes. Now tell me, for life insurance in ATC, what did I say? In ATC there are 3 items where 3 people are allowed. Assessee, spouse, children. And children can be minor, major, anyone. So they are just giving major just to create a confusion. It doesn't matter whether the children are major, minor, dependent, independent. It is just assessee, spouse, children. So it is allowed. And whenever life insurance policy is there, you should be reminded of the limit. Yeah. Limit is for normal people either 20 or 10. For handicap and diseased people, 20, 10 and 15. So here it is a normal assessee. So either 20 or 10. But 20% when? If before 1/4/12. But this is on or after 1/4/2012. So it will be 10% of sum assured. Limit will be 10% of sum assured. And what is the sum assured? 1,80,000. So 10% of that, 18,000. So 18,000 is the maximum limit. But in our question, the premium is less or more. More is not allowed. Anyways, you can make a formula whichever is less. So as per whichever is less, it will be 18,000. So you will take only 18,000 in ATC. Then mediclaim insurance premium for self and spouse. So self and spouse, but this will come in ATD. Additional deduction or basic deduction? Basic. Additional comes when there is a senior citizen. Here neither he is senior citizen nor his wife or children. Okay. So self and spouse, they are not senior citizens, so it can come in basic. But in basic deduction, what is the limit maximum? 25,000. Here it is how much? 26,000. So you will take only 25,000. So ATD 25,000. Then donation to public charitable institution by check. See, charitable institution donation means it will come in FO Chamat. And in Chamat this is C. C for charitable purpose donation. Okay. Did you identify that it is charitable purpose? So actually you should write your L 50%. I hope you are writing all the markings over here. ATG L 50%. Okay. Then LIC pension fund. This will come in ATCCC. ATCCC. But this will go along with CCC CCD1. Then donation to National Children Fund. This is ATG. Unlimited 100%. U 100%. It comes in Panek Zalma GS. Then Jawaharlal Nehru Memorial Fund, ignore, not allowed. I told you earlier there were some donations from the name Rajiv Gandhi, Jawaharlal Nehru, Indira Gandhi. They are all cancelled now. Okay. Now deduction is not allowed for these donations. So you will have to ignore this. Then donation to approved institution for promoting family planning. So this is ATG L 100%. In ATG it will be L 100%. Limited category 100%. It is from FO Chamat F. Then deposit in PPF ATC. Okay. So check the answer. In 5 heads of income, you don't have to prepare any working because directly answer is given gross total income. That is 7,75,000. Let's deduction under chapter 6A. ATC, CCC, CCD1. You have to make a list of that. And in that list, first life insurance premium 18,000. Life insurance premium 18,000. Then LIC pension fund 60,000. Deposit in PPF 1 lakh. So there were 3 items in ATC, CCC, CCD1. So total of 3 items is 18,000, 60,000 and 1 lakh. That comes to 1,78,000. Compare with 1,50,000, which is less, 1,50,000. 1,50,000, okay. Then we had ATD 25,000. ATD 25,000, right? ATG you have to take at the end. So that's it, we have reached at the end. So after ATD, only ATG is left. And when only ATG is left, your answer is called adjusted gross total income, AGTI. Okay. So what is your AGTI? 6 lakhs. 6 lakhs is your AGTI. And thereafter the presentation, I hope you know. First you will write ATG donation. Then in 2 parts, unlimited, limited. Unlimited donations, what we have? National Children Fund. 25,000 full amount you will take. And we have only one amount, you can take directly in outer column also. National Children Fund 25,000, okay. Then in limited category, note number 1. For limited category, we always prepare a note, okay. So, and as per the note, first you will add FOCHMT. So in that F, family planning is how much? 40,000. O nil, C is how much? 50,000. But will you take 50% right now? No. At the beginning, you will take full amount. So F is 40,000, C is 50,000. Then H, M, T, these donations are not there. So it will be nil. So total of FO Chamat is 90,000. Then compare with 10% of what? AGTI minus 3 items. But those 3 items are not there in the question. So whatever is the AGTI 10% of that, that is 6 lakhs 10% 60,000. So 60,000 and 90,000, which is less 60,000. Then first preference you give to family planning, which was 40,000. 40,000 100%. Balance 20,000 50%. That comes to 10,000. So 10 and 40 50,000. So 50,000 will be ATG limited category. ATG limited category. That's it. So what is the final answer? Net taxable income how much? 5 lakhs 25,000. Then after this, question number 8 was homework. Read. Mr. Gurnam, age 42 years, has salary income 5 lakh 50 for the previous year ended 31st March 24. Then this is, see, salary income in bracket they have written computed. What do you mean by computed? Calculation already done. Don't take standard deduction. See, if they say he is working somewhere, he has got salary, then you will take standard deduction also. But here they have written computed, means calculation is already done. Computed means already calculated. So don't take by mistake standard deduction, okay? So this is the ready-made answer. Then he has earned interest of 14,500 on savings account. You know, savings account interest, you get 80 TTA. But first income from other source, then 80 TTA. Okay. TTB is for senior citizen. Here is not a senior citizen, his age is 42 years. So it will come in 80 TTA, maximum 10,000. But first include in income from other sources. Then compute the total income. Now read the points one by one. Life insurance paid to Birla Sun Life Insurance in cash. Tell me it is in cash. Is it allowed? Yes. Allowed. See, the requirement of check was there in which section? 80D and all donation sections. In all the donation section and 80D, there was requirement of you cannot use cash. Okay, and especially in 80D, any amount it should not be cash except preventive health checkup. But in 80 GGA and G, GGA and G, yes, yeah, I'll come to that. GGA and G up to 2000 cash is allowed. Okay, and in GGB, GGC cash is not allowed at all. Yes, there was one more section 80 JJAA. There also account pay, check, draft and ECS was there. Okay, but rest all section there is no requirement of cash or check. So this is from 80C. In 80C we didn't have like it should be paid by check or what. Okay, so this is just for confusion. So this is just for confusion. I just summarized where the requirement of check was there and where cash was not allowed. Okay. So in cash it is allowed, and what is the premium? 25,000, and it is for the insurance of a dependent parents. Parents insurance is not allowed. You know, in lump renters there were 3 items where 3 people are allowed, and 3 people means assessee, spouse and children. That's it. So parents life insurance premium is not allowed. So because it is for dependent parents, this will not be allowed. Then, so you have to completely ignore this. Next point, life insurance premium 25,500 paid for the insurance of the life of his major son. Tell me, major son is allowed or not? Who all are allowed? Assessee, spouse and children. So children is allowed, whether major, minor doesn't make any difference. And who is not dependent? It's okay. Dependent, independent doesn't matter. The condition of dependent is there only in D sections. Okay. So this will be allowed in 80C. But what is the limit? Either 20% or 10% depending upon 1/4/2012 date. So here the policy is taken when? 31st March 2012. That is, it is before 1st April 2012. So 20% will be the limit. 20% of sum assured. Sum assured is 3,50,000. 20% of that comes to 70,000. So maximum 70,000 is allowed. But we have paid only 25,500. It is less. If it is less, take less. Or if you want, use the formula whichever is less. So between 70,000 and 25,500, what is less? 25,500. Okay. So this will come in 80C. Then life insurance premium paid by check 22,500 for the insurance of his life. His life allowed. For assessee it is allowed. And here the policy is of 2018. So you will take 10% of sum assured. So sum assured is 2 lakhs. 10% is 20,000. But the actual premium is more. So you will not take more, you will take only 10% of sum assured, that is 20,000. 20,000 should be taken here. So even this will be considered in 80C, but 20,000. Then premium of 26,000 paid by check for health insurance. Health insurance means mediclaim insurance. 80D, health insurance is nothing but mediclaim insurance for self and wife. So this will come in the first segment. It will not come in the parent segment. Okay. And there first you have to check additional deduction. Additional deduction only senior citizen, but they are not senior. So it will come in basic. And in basic deduction maximum 25,000. And here it is how much? 26. So you will take, wait. I should also check second point. There is one more point related to 80D. Let's do that together. It will not affect my answer, but still we follow the protocol that read all 80D sentence together. So there was one more sentence for 80D, paid 1,500 in cash for the health checkup, for his health checkup. So even health checkup amount will be counted. But for health checkup, you know, overall you can take 5,000. For yourself, spouse, dependent, children, parent, for all you have to take 5,000. So we will not waste health checkup here. Anyways, we have got 26,000 which is more than sufficient. We can take basic deduction of maximum 25. So even 25 compared to 25, only this 26,000 is more. So why to waste this preventive health checkup? So we can say I don't want this preventive health checkup because I have sufficient mediclaim insurance of 26, which is already giving me 25,000 deduction. So we should assume that this we are not used, so that we can use this preventive health checkup of parents fully. See, overall preventive health checkup we can take 5,000, and in 5,000 I want to take this full. So I will say that 1,500 I have not taken, and I don't need also. Why I don't need? Because I have paid a sufficient mediclaim premium of 26,000, and anyways I will get deduction of 25. So I am happy with this 26 only. So that means I am not utilizing this health checkup amount. So health checkup amount till now it is not utilized. So I have got full 5,000 quota with me, and out of that 4,500 of parents I can take. Okay. So this I can take in the parents segment. Okay. Yes, yes.
Sir, total 6,000 orders, sir, preventive health checkup to maximum 5,000
No.
combined preventive health checkup.
See, his doubt is what? Sir, total preventive health checkup is, see, what is his mistake? See, what he is doing? He is adding these two amount and it is coming to 6,000. So he is saying we can take 5,000, but we don't want this. See, can you take this in parents sector? Can you take this in parents? See, this 1,500 at the most it can be used where? You remember that format or not? I will have to show that format. Where is that? ATD. See, that 1,500 preventive health checkup I can use at the most here only, because it is whose preventive health checkup, this 1,500? His means assessee. So this 1,500 at the most if I want I can use in this segment, but I don't want to use. Why? Because I have sufficient basic deduction amount. See, don't see this sum. This is a format of this some different question. I am just removing this page to show you the format. Okay. So in basic deduction we have 26,000 mediclaim premium in our question. See, our question mediclaim premium is how much? 26,000, which we can fully utilize, and there also there is a surplus of 1,000. So 25 taken. And this 1,500 if I want at the most I can take in own spouse and children. But this 1,500 although I can take in own spouse and children, but I will not utilize it because it is in extra. Maximum limit is 25. So what about this 4,500? This is pertaining to parents. So this will go in parents. Now his doubt was what? Sir, we can take 5,000, but 5,000 parents amount should be 5,000. It is only 4,500. How can you take from 1,500 in parents? 1,500 doesn't pertain to parents. It pertains to his health checkup. Okay. So this has to be ignored. In short, see, better ways to mark like this. This I took, but from this I could take only 25. This I am not taking. I want to take, but there is a limit of maximum 25,000, which is exhausted with the help of this 26,000 only. Okay. So this I don't want to take. Okay. So 4,500 this belongs to parents. It can be taken in parent sector. And there also they are senior citizen. So take it in additional deduction. First we take additional deduction and then we go for basic deduction. And since parents are senior citizen, we will take this amount in additional deduction. So see, finally it will be like this. Look, don't see these amounts. These are amounts of some other question. I am just cancelling this. So tell me, fill up these amounts. Here additional deduction 0. Here 25,000. This is 0. And for parents additional deduction 4,500. This is 0. This is 0. Okay. And this should be maximum 50. It is 25 only. And here it is 4,500. So total I can take 29,500. This is 80D 29,500. Okay. Okay, tell me, answer this. Answer this. What if this 26,000 amount was 16,000 only? It was only 16,000. Then I am not able to take full 25. It's only 16. 25,000 basic deduction I am talking about. I want basic deduction of 25,000. I cannot put an eye on additional because I am not senior here. My parents are. Okay. So additional forget, but basic deduction I want full 25. But what if it is only 16,000? So what if this is only 16,000? I am changing a 16,000. Then I will use preventive health checkup. So 16,000 in the name of Mediclaim premium plus 1,500 preventive health checkup. Then I am using fully 1,500 because I am in need of that amount. So then it will be how much? 16,000 plus 1,500, 17,500. 17,500. But then preventive health checkup is used. So, and what is the total amount for preventive? 5,000. And if I use up 1,500, so I am left with 3,500 in parents. So I will take only 3,500 in parents. Although for parents it is 4,500, but I can take only 3,500. Okay. But our question was that this 26,000 itself is more than sufficient for us. So we don't want preventive health checkup. We don't want to waste it. We will keep it for parents only. But for parents it is 4,500, so you will take 4,500.
Sir, in the absence of information given, take the senior citizens as insured.
Yeah, but that question arises when there is a medical treatment. See that uninsured senior citizen point which you are trying to say. See, this thing comes when when there is a medical treatment. So that much problem they will not keep it silent. They will say, if they are talking about medical treatment, they will say uninsured senior citizen. Okay. Okay then. So finally 80D is how much? 29,500. In that own spouse children sector 25,000 and in the parent sector 4,500. So total 29,500. Okay. Then paid interest of 6,500 loan taken from bank for MBA course. This is loan for education 80E. But it is for daughter's education. Whose education allowed? Assessee, spouse, children and student for whom you are a guardian. So children allowed. Then 5,000 donated in cash for family planning. See in 80G up to 2,000 cash is allowed. But this is about 2,000, cash is not allowed. So just ignore it. And here you cannot take like this. Up to 2,000 you will take, balance you will ignore. This I told you in one lecture earlier when he had a doubt that if it is up to 2,000 cash is allowed. But is it up to 2,000 or about 2,000? About 2,000. So cash is not allowed. Everywhere the logic is same. Whether G or GGA, the criteria is same. Did I say it is only in GGA, it's like this? See, once up to 2,000, we are okay. But once it is 3,000, why cash? Totally disallowed. It's not like that partly allowed, partly not allowed. Totally disallowed. If you want to get it allowed, it should not be by cash because your amount is above 2,000. So about 2,000 donation in cash is not allowed. So not allowed means completely disallowed. We cannot do partly here. So this will not be considered in 80G. Did you understand that? Don't do like this, that up to 2000 you take, balance you don't take. That breakup is not allowed. Once it is about 2000, why did you use cash? It's not allowed. Such donations are disregarded. See, donation is just one item, and that one item you did in cash, so disregarded, disallowed. Answer: 5 heads of income. First tell me the 5 heads of income is how much? 564 500. Total of those two amounts 564 500. Okay. Then deduction under section chapter 6A. In that first 80C. In 80C we have life insurance premium. This is 25 500. Okay. Then here it was 20,000. 10% of sum assured. So that's it. Only two items were there. So total of that is 45 500. So 45 500 is eligible. 45 500. Then we had 80D 29 500. Then 80E 6500. So final answer. Okay, sorry, 80 TTA. I forgot 80 TTA. Because of interest on savings account, it will be 10,000. 80 TTA 10,000. So there are 4 deductions: 80C, D, 80C, D, then E and TTA. So final answer will be 4 lakhs. This is the final answer. Then question number 10. Read. Mr. Raj Mohan, whose gross today income is 6,40,000, furnishes following information. Okay, wait fast. Gross today income is given directly. Then tell me one by one, what is the effect of stamp duty paid? 80C. It will come in 80C, stamp duty registration. Okay. Then 5 years spotted account, 80C. Donation to recognized charitable trust, it is 80G limited 50%, L 50%. Okay. FO Chamat C, charitable. Then interest on loan for higher education, it will come in 80E. But it is whose education? Spouse. Allowed. Who can study here? Assessee, spouse, children, student for whom he is a guardian. It will come in 80E. Then donation to Rajiv Gandhi Foundation, not allowed. Those Rajiv Gandhi, Indira Gandhi, Jawaharlal Nehru donations are not allowed now. Compute the total income of Raj Mohan, assuming his gross today income includes winnings of 1 lakh. So that's okay. You will have to show gross today income in 2 parts: winnings and others. Winnings 1 lakh, other income 5,40,000. So total of that, it's okay. But see, let us respect the question. When they have given winnings amount separately, so when you are writing the 5 heads of income, show winnings separately. Otherwise you are insulting the question. If you directly write gross today income 6,40,000, okay, they will not deduct marks for this silly thing, but still not advisable. So statement of total income, first you can write winnings and then other income. No need to specify the head also. Winnings, then other income. Winnings 1 lakh, other income 5,40,000, gross total income 6,40,000. And then 80C, how much? 2 things were there: stamp duty and 5 years spotted account, post office time deposit. 70,000 80C. 80G you will take at the end. So 80C will be 70,000. Then 80E 10,000. That's it. Now only 80G is left. And when 80G is left, you have to find out the answer. That is called AGTI, adjusted gross today income. So what is the AGTI? 5,60,000. 5,60,000 is your AGTI. 5,60,000. Remember? Then ATG, donations, unlimited, not there. Limited category, working note. Working note number 1. In FO, Chamat, F is nil, O is nil. Chamat, C is 75,000. You will take full 75,000 right now. HMT nil. So total 75,000. Compare with 10% of AGTI, that is 10% of 5,60,000, that is coming to 56,000. So 56,000 and 75,000, which here is less, 56,000. Then breakup, first preference to family planning Olympic, but that is not there. So entire 56,000 will come in Chamat. 50% of that comes to 28,000. So ATG 28,000. So what is the final answer? 5 lakhs 32,000.
For the donations that we have ignored in previous question and in this question, we will have to write a note.
Yes. See, look here. See, items which you ignore in the question, it is better you write a note. At least in exam, you consciously make it a point that if you are ignoring something, you write the note. Why are you ignoring? Because that was part of the question. So you have to answer for that. See, if you have taken something in the answer, so you already answered. But if you have not taken something, why are you not taking? So you have to write a note for that. Like in the last question, there was certain item which you ignored. This life insurance premium you ignored. Why? Because it was for parents. So you have to write note that life insurance premium paid for parents is not allowed under ATC. Then what else you ignored? Donation of 5,000 in cash is not allowed because donation exceeding 2,000 cannot be made in cash. Whatever items you ignored, you should write a note. See, right now it's okay because right now no one is awarding you marks. We are just checking the answer. Okay. But in exam you have to be systematic. Right now only you make your answer systematic. Whatever items you ignored, write a note. You can write somewhere, write this sentence somewhere. Because after some time you will forget this. Somewhere in the notebook where you see that page frequently, write any item ignored, write a note. Any item ignored, write a note. See this small thing which I say, you should immediately make a note of that. Any item ignored, in the question, write a note. Okay, done. Okay, now see here. In chapter 6, say what is left? ATQQB and RRB. Now see, section ATQQB is royalty for books. See, when you write books, you get royalty income. And you know what is the system in royalty income? For example, if I write a book, so first I will give that book to the publisher. And what publisher will do? He will publish. Publish means he will print and then he will sell in the market. And whatever sale takes place, I will get some percentage of that as my royalty. Who am I? Author. Author will get some percentage of the total sale of his books. But who is going to take the headache of selling the books? Publisher. So author will he will simply write the book. But he will give his content to the publisher and then publisher will print many books and then he will sell in the market. He will make the sales and I will get say 10%, 15% of the sale as my share. That is called my royalty income. And for royalty income you get deduction under section 80 QQB. But this is royalty from books. And you know what kind of books it should be? It can be any books. It can be books of literary nature, artistic nature, scientific nature. It is called last books. And in fact, see, in literary, artistic, scientific, all varieties are covered. You might feel, oh, only three types of books. See, these are three categories. In these three categories, all types of books are covered. See, when I say literary books cover so many things. Books about a particular person, it can be a fiction, it can be novels. People read fiction or not, some story, etc. They are all literary books. Most of the books are called literary books only. Unless if it is on art or science, it is called artistic or scientific. In short, see, don't think that only three types mean these are not three books, three categories which covers most of the books of the world. Okay. So you don't have to worry about this. Once you see in the question royalty from books, assume it is definitely falling from literary, artistic or scientific nature. Okay. This three category covers all types of books. But in the act they have said it should not be a book for schools. It should not be a school textbook or a journal or magazine type thing. Like see, scientific book. In school we have got physics, chemistry, biology. They are also scientific book. So any book which is meant for school children, if such big book if you write, you will not get deduction. Royalty should be from general books, not the books meant for schools. Okay. And even if you get royalty from journals, magazines, newsletters, etc. See what is journal, magazine, newsletter? They are small article of few number of pages. Even they are not eligible. It should be a proper book. Okay. For example, my direct tax book. I have written direct tax book for CA final. CA inter book coming soon. So that is a book eligible. It is not a book meant for school students. It is a book for CA students. Even practicing chartered accountants are using my book. So thus such books are eligible. I can categorize them as literary books. See, literary is a broad term. It covers all types of books. Okay. But you know, what is the treatment of royalty income? First you have to include under the head income from other source. Then you will get deduction. And deduction, it is maximum 3 lakhs. Maximum 3 lakhs deduction you will get. Maximum 3. So that means if I earn royalty of only 1 lakh, then if you include only 1 lakh, then minus only 1 lakh. Maximum you can get 3 lakhs. So tell me if someone has earned royalty of 10 lakhs. Royalty of 10 lakhs. Then deduction will be limited to 3 lakhs only. So here you have to remember 3 lakhs. 3 lakhs. And what is the logic of giving this deduction? To encourage people to write books. As you know, reading books is a good habit. But reading books is a good habit. To read books, there should be books. So someone has to write the books. So we are encouraging the writers. Please write books. Because if you write more and more books, people will read more and more. And reading is the best habit. Okay. So to encourage this culture in India, government is encouraging all the authors and the writers to write the books. And what is the encouragement? You will get income also, and that income is tax free. But not fully tax free, maximum up to 3 lakhs. Okay, now actually there is one more limit here. First limit is maximum 3 lakhs deduction you will get. Second, if you get royalty as a percentage of your sales, it should be maximum 15% of your sales. But you know, usually publishers give only 10%. Like my book, my CA final book is published. My publisher is in New Delhi, Commercial Law House. Okay, they have published my book, and whatever books they sell, they give me only 10%. This is the usual custom in the market. But by chance, if I say, no, I am getting royalty of 20% of the books sold by my publisher, then deduction will be based on only 15%. It is possible, maybe I am a commanding author, I am saying, if you want to publish my book, I want this much royalty. It's possible that I am so famous that all the publishers are dying behind me. They are saying, we want to publish your book, we want to publish your books. So I can command that if you want to publish my books, whatever books you sell after publishing, means understand or not? Printing. Whatever books you sell after publishing and printing, I want 20% of sale as my royalty. So in case I am charging 20% of sales as my royalty, so in my income I will include full 20%. But while calculating deduction, it will be based on 15%. But that also it should be limited to 3 lakhs. So as per 15% of sale, it comes to say 4 lakhs, but then it cannot be more than 3 lakhs. So in short, there are two limits, 3 lakhs and 15% of sales maximum. And out of the two, whichever is less. Okay. Now see, there is one more limit over here. Wait. First you remember this much. Either 3 lakhs or 15% of sale. Why we have to do whichever is less? See, whenever government brings multiple limits, so which limit you have to give importance to? Whichever is less. Obviously, because this 15% of sale can come to 4 lakhs also. But 4 lakhs is not allowed. Maximum 3 lakhs. Okay. And if 15% of sales based on that it comes to only 1 lakh, then only 1 lakh. Means out of the two, whichever is less, either 3 lakhs or royalty based on 15% of sales, whichever is less. Okay. Then see, if your books are published in foreign country, if your books are published in foreign country and if you are getting royalty from foreign country, then to get the deduction there is a condition that you should bring the royalty earned in foreign currency in India. Only if you bring the foreign currency in India, you will get the deduction. This is for authors whose books are published in foreign country. So if for example I have written a good novel and my novel is so famous that a publisher in UK, he has published my books and my books are sold heavily in London. So it is a foreign royalty. So I will get deduction. There is no problem in getting the deduction, but there is a condition that whatever royalty is generated in London, I will have to bring that in India. And latest I have to bring up to the end of the year or within 6 months from the end of the year. Our end of the year is 31st March 24. If I am not able to bring up to the end of the year, I am given 6 months time. Our year ends on 31st March 24. After that 6 months is April, May, June, July, August, September. By September I have to bring the royalty earned in foreign currency in India. Then only I will get deduction. And you know what is the logic for this? Because see, government knows that his author will be desperate for the deduction. And government is taking advantage that his royalty is being earned in foreign currency. Let's force him to bring the foreign currency in India. And whenever foreign currency come to India, it has a positive impact in Indian economy. See, our government always craves for what? Foreign currency should come to India. And government knows this author will be desperate for deduction. So we have put him a condition. You want deduction? You want? Obviously you will say yes. Bring royalty to India. Bring that foreign currency India. Because it is a pride of India that your books are being published outside India. So foreign currency can come to India. So bring it. Oh no, someday or the other I will bring. Not someday or the other. Bring now. Bring now up to the end of the year, or if not up to the end of the year, within 6 months from the end of the year, you have to bring to India. Then only you will get deduction. And if he says, no, I am not able to bring in India, I will keep royalty in a bank account in foreign country only, that is not allowed. Bring foreign currency in India. And if you are not able to bring within 6 months, you can get extension also. But for extension, you have to take permission of RBI, Reserve Bank of India, or other competent authority. Competent authority means those who are allowed to deal in foreign currency. It can be State Bank of India also. Any bank who are allowed to deal in foreign currency. This is for if you are not able to bring within 6 months. See, better you remember like this. Look here. See this drawing. See, you have earned royalty during, your earning is during April to March. So you have got a choice either to bring it during the year itself. It is possible because the earning is done during the year, so you can bring the royalty in foreign currency during the year itself. But if you are not able to bring, then you have got 6 months time. 6 months from end of the previous year. See the language, end of the previous year. We always call our year as previous year because we calculate income for the previous year. So the language should be previous year. So bring within 6 months from the end of the previous year. And if you are not able to bring within 6 months, you take 7 months, 8 months, 9 months, but with the prior approval of RBI or any other competent authority. Competent means competent to deal in foreign currency. Okay. So in the exam they will say that he brought the foreign currency India in 7 months after the approval of RBI. So you should allow it. But within 6 months if you are bringing, then you don't need any approval. You will be eligible for royalty deduction. So see, my formula is revised now. Look. 3 lakhs, 15% of sale or actual royalty income. If it is Indian royalty, take full. Foreign royalty, only the portion which is brought in India. See, in all our formula we write actual amount. So when you write actual royalty income, if it is Indian royalty, take full Indian royalty without any condition. And if it is a foreign royalty, so can you see, I have put an asterisk mark here. What does this mean? Foreign royalty, only that amount which is brought in India within 6 months from the end of the previous year or such extended time as may be allowed by RBI or other competent authority. Repeat how to say, it should be brought in India within 6 months from the end of the previous year or such extended time as may be allowed by RBI or other competent authority. You should be able to write also the sentence, or such extended time as may be allowed by RBI or other competent authority. Okay. And only that much amount you have to take in the formula. So tell me, foreign royalty is 5 lakhs and brought in India is only 1 lakh. So only 1 lakh will come here. Plus Indian royalty will be taken fully. So that is one amount. Second is 15% of sale. Third is 3 lakhs, whichever is less. In short, section is over. You just have to remember this formula. And everything is a logic. See, 3 lakhs why? Because government doesn't want to give deduction of more than 3 lakhs. Because see, if government makes it totally tax free, how will government get tax? See, basically government wants to encourage authors. Come on authors, write books, write books. So to encourage them, incentive of 3 lakhs is sufficient. If government gets so emotional, no author should be given importance, let's make them tax free, it will be too much. Because there are authors getting royalty of 50 lakhs. They are just sitting at home earning 50 lakhs in a year. Possible, maybe their books is so famous, sold across the world. So full amount is not possible. So they have restricted to maximum 3 lakhs. And what was the logic of this condition? Because any author will get a reasonable amount of 15% of sales. That also is on higher side. See, I know this why? Because even I am an author. So I have inquired in the market. I had a talk with many publishers, Taxman, Bharat Law House, etc. I had a talk with many publishers. No one gives royalty of more than 10%. So 15% is reasonable. But still if someone says, no, I am getting royalty based on 20% of sales, then enjoy. But deduction will be based on 15%. And the third condition is actual amount. Because if the actual amount is less, we will take less only. But actual amount, Indian royalty, full amount. Foreign royalty maximum to the extent brought in India. Only that much amount which is brought in India within 6 months or such extended time as may be allowed by RBI or other competent authority. See, this formula you have to use here in the deduction. But at the top in income from others, so you have to include the full amount. Now, same section like 80 QQB is 80 RRB. The only one difference is what you know. Here it is royalty from books. But in section 80 RRB, it is royalty from patents. Royalty from patents. So for books royalty, QQB. For patent royalty, RRB. Do you understand? From patent also you get royalty. What is a patent? See, whenever you invented something, whenever you invented some formula, some technique, so it becomes a patent. So from patent also you get royalty. You know what you can do? Whatever invention you have done, you can give your invention to big company and you can tell them that I want royalty for this. So royalty is also earned from patents. But for that the section is different. 80 RRB rule is same. Everything is same. Except one thing, this point will not come there. Because giving royalty as a percentage of sales is a culture in books. That is not a culture in patents. In books, this is a very common culture. In fact, I get royalty like this only. My publisher is trying to sell my books across India. Whatever sale takes place, I get some percentage of that. So, getting as a percentage of sale is a culture in books. So, that's why in books royalty, this thing is there in the formula. But, look at the next slide. In this patents royalty, we don't have this 15% of sale thing. So just skip that thing. Rest all is same. So the formula will be 3 lakhs or actual Indian royalty or foreign royalty brought in India within 6 months, whichever is less. And same. First include the full amount, then deduction as per this formula. Everything is same. Yes. But the patents over here should be registered. Obviously, when your patent is registered, it has value. Otherwise, everyone will say, I have done a great invention, great invention. If your invention is really great, get it registered. And if you go for registration, if it is actually registered, then we can believe also, yes, it's a great invention. Otherwise, if you have done some hopeless invention, government will not register also. So, only when your patent gets registered, you can say it is authentic and it's some great invention I have done. Then only you become eligible for deduction under 80 RRB. So both these sections are actually twins. QQB, RRB, royalty, books, patents. Books should be last books, patent should be registered patent. See the way I said, books should be last books. Last means literary, artistic, scientific, anything. Books should be last books, patent should be registered. But in books 1, 2, 3 which is less, in patent 1 and 2 which is less. What is missing here? 15% of sale. See here it is same thing. Foreign royalty should be brought in India within 6 months. Everything is same. Okay. Now this section is only for resident individual. 80 QQB RRB. This I told you at the beginning only. There are 5 sections which are allowed only to residents. 80U, DD, DDB, QQB, RRB. Even these sections are meant for resident. Why? Because government wants our residents to do some invention work and write the books. Why to encourage a non-resident? A non-resident is a person staying in Dubai, London, America. Will government encourage, come on all Dubai people, Singaporean people, Hong Kong people, do some invention? Their invention is not going to help India. We want to make our India proud. So that's why we are encouraging Indian residents. That's why the deduction is only for residents. This I have already told you. There are 5 sections where assessee is resident, then only deduction is allowed. 80U, DD, DDB, QQB, RRB. Rest all section whether resident, non-resident doesn't matter.
सर अगर वो फॉरेन ऑथर है वो अपनी बुक्स इंडिया में बेच रहा है फिर उसके बाद वो जो उसका इनकम रॉयल्टी मिल रहा है वो इंडियन बैंक्स में रख रहा है तो सर फिर उसमें गवर्नमेंट कुछ नहीं देगी.
See, his doubt is what you know, if there is a foreign author, his books are being sold in India, so will he get deduction? And that foreign author says, I am keeping all my royalty in Indian banks. Still government is not excited. After all, you are a foreign author. and foreign author is basically non-resident. See, we don't want to encourage them. Why should we give him deduction? In fact, we'll say, oh, foreign author, you are getting income from India, pay tax in India. And what if he says, what about that deduction of QQB? Why? We don't want to encourage foreign authors. Yes, if Indian authors are there, we feel proud also. For example, you come to know CA Shirish Vyas book has become so famous, you will feel proud. But if you come to know Mr. Michael, is a famous author, so we are not excited. Michael means some foreign author. So, if a foreign author gets royalty income in India, he will be taxed in India because he is getting income from India. But we will not give him deduction under 80 QQB because he is a foreign author, means he is a non-resident. Okay, you should be resident to claim deduction under 80 QQB as well as RRB. Okay, now see one question based on this. Look here. Yes.
Maximum 3 lakh is for whole life.
See, her doubt is what maximum 3 lakhs is for whole life? No. These are yearly deduction. You know, her doubt came why? Because in the income from salary topic, when gratuity limit was there, maximum 20 lakhs. I told you that 20 lakhs exemption for gratuity and even 25 lakhs for leave salary is exemption for the whole life. So, if one time you have taken the exemption, next time your amount will reduce. Remember, one sum of gratuity was there. So, exemption limit in salary of gratuity, leave salary, that was exemption for whole life. But this limit which I was discussing now, this is every year you can get deduction of 3 lakhs. Every year you earn royalty, 3 lakhs deducted. Every year you earn royalty, 3 lakhs deducted. So this is yearly deduction. Every year you can claim. It's not once in lifetime. See question number 6. See what is given. Mr. Akash received royalty of 2,88,000 from a foreign country for a book authored by him, being a work of literary nature. So since it is royalty from books, section will be 80 QQB. See, he is getting royalty from foreign country, but Akash is Indian. If the problem is silent, we can assume Akash is Indian, resident person, okay. But since he is getting royalty from foreign country, what is his duty? To bring that foreign currency in India. Otherwise, government will not give him deduction. And government is also smart. Government actually craves for foreign currency. And government knows this author is also desperate for deduction. So we have compelled him, bring foreign currency in India, then only we will give deduction. So 2,88,000 is what? This is the actual royalty income. This an actual amount you have to include in income from other sources. But see, the rate of royalty is 18% of the value of books. It seems he is a premium author. Nowadays, no one gives so much royalty. But maybe he is so famous that he is getting 18% of the value of books as royalty. But deduction will be restricted to 15%. We'll see how to do that. Expenses incurred by him for earning this royalty was 40,000. Now see, if expenditure is connected with royalty income, you can deduct from the royalty income. Royalty income comes in income from other sources. Deduction under section 57. You remember, if any expenditure is there connected with the income, in income from others, so there is deduction under section 57. So this you can minus under section 57 from 2,88,000. Then amount remitted to India till 30th September. You know what is 30th September? The expiry of 6 months. 6 months was the deadline for bringing foreign currency in India. And they are saying he has brought how much?
2,30,000.
Oh, he has brought less. How much is his actual royalty?
288.
But he could bring in India only 2 lakh 30, and what they are saying, remaining amount was not remitted. Was not remitted means was not sent to India. Means it is kept outside India only. And we want that foreign royalty should be sent to India. It should be brought in India. We want foreign currency should come to India. But they have brought only 2 lakh 30. Compute the total income. So tell me, how will you do? First, in the 5 heads of income, there is only one head income from other source. There you will write royalty income. Okay, and then deduction under chapter 6080 QQB will go as per the formula. Which formula? This formula. And let us not discuss right now. Let's start solving. As we reach at a particular point, we will discuss on that point. Question 6, statement of total income. Okay, now statement of total income. Go headwise. I have not written income from salary, house, property because not there. Directly income from other sources. But your mind should work like that only. Huh? Income from salary not there, house, property not there, business not there, capital gains not there. So directly we reach income from other sources. But see here royalty income is how much?
2,88,000.
But there is expenditure connected to royalty. Sorry, 40,000. So your presentation should be like this. First royalty in the inner column 2,88,000. Then what you write? Deduction under section 57. In income from other source it was section 57. But see, keep in mind royalty income can become income from business also. If you are a professional writer, writing books is your whole and sole business, then it can become income from business also. See, there are some professional writers, they do one thing only, they keep writing books, that's it. Then it can be income from business also. And there also, if there is some expenditure, you can get deduction. Huh? But we have assumed it is income from other sources. Then that's it. This is the only one income. Total of that is called gross total income. See here. Then less deduction under chapter 6A. Less deduction under chapter 6A. Okay, now do one thing. I will give you 2 minutes time. Do some working on your own and find out what should be the amount of deduction over here. Because here it is little tricky. It's not that simple. You will get the answer by applying the formula. You have to apply some brain also. Don't write anything on your calculator. Try to find out. You can do some rough work somewhere, but try to find out what should be the deduction under section 80 QQB. If you want, I will keep the formula in front of you. See here. Only if you try, you will understand your mistake. And when I have asked you to try, that means there is some tricky point over here. Done? Okay, now see here. Tell me, in the 5 heads of income, you have included gross royalty or net royalty?
Net.
Net of expense. So deduction will also be based on net amount. So when you include net royalty in the income from other source, so obviously when it comes to minus, it will be minus on net basis. Here net means net of all expense. So see here, look here. Your actual royalty which you included was how much? Gross it was 2,88,000. But there was expenditure connected to royalty, so net amount was 2,48,000. This we included in income from other source. Okay, this is the actual amount. Now what is the formula for deduction? One amount is 3 lakhs, other is based on 15% of sales. So see, based on 18%, if it is 2,88,000, so based on 15%, it will be how much? Cross multiply. How much you get? 2,40,000. But again, that is a gross amount. This is a gross amount. Then there is expenditure. See, this is gross or not?
Yes.
So from 18% to 15%, when you convert by cross multiplication, you are getting some gross figure only. So what is that? 2,40,000. But deduction will not be on gross basis. It will be on net basis. Because in income from other source, you are included net. So deduction will be based on net. When you include only net, so deduction will also be net. So I will make it net. And what is the net amount? 2 lakhs. Yes, the limit of government 3 lakhs is already net. Because the amount which government has said maximum 3 lakhs. So they have said 3 lakhs is net. That you will not do it net, because that is a fixed amount given by government, and government knows all the incomes are included in 5 heads on net basis. So they have fixed the threshold limit. Threshold means limits based on net only. So don't touch 3 lakhs. That is automatically net. But there was one more limit. brought in India. There is one more amount, right? Actual royalty of India and actual foreign royalty. Indian royalty we don't have in the question, but there is foreign royalty in the question. So how much is brought in India? See, 2,30,000 is brought. But even this is the gross amount. Because what you will bring is royalty, and your royalty is actually gross only. Do we bring expense in India? Think practically, I am getting some royalty from a foreign country, say Singapore. So whatever is the royalty that I will bring in India, so the amount of 2,30,000 is the actual royalty, and the actual royalty is gross. If someone argues, sir, this is net of why net of expense? When you bring the actual amount. Okay, and your actual amount is original figure is gross only. So even this is a gross figure. So see, brought in India is 2,30,000. Then expenditure of 40,000 is there. See, this expenditure I might have incurred in India. I am basically an Indian boy, Mr. Akash. Our assessor Akash, he might be having his office or any place in India. He might be having some staff in India for which he is incurring expense. But his royalty is emerging from foreign country. So what he brings from foreign is the gross royalty. Okay. And 2,88,000 was gross. So by converting into 15 also we get gross. So these are all gross figures. Okay. But we will have to make it net. So tell me, if this brought in India is made net, it will become 1,90,000. And our third amount is maximum 3 lakhs. This is the formula. Formula was like this only, 3 lakhs, 15% of sales, and then brought in India, whichever is less. See, this is the same thing which I have done here, look. 3 lakhs, 15%, and foreign royalty brought in India, whichever is less. I have done the same thing. See, this is foreign royalty brought in India. This is royalty based on 15% and 3 lakhs. Here the main tricky point was, don't forget to net off the expense. The given figures are gross, gross, gross. But we will have to make it net, net, net. And why to make it net? Because in the 5 heads, the amount which you included is net. So deduction will also be based on net. So when you include only net, so minus also net. So this net thing doesn't strike. Yes, if question would not have given you expenses, then everyone would have got right answer. If in this question expenses were not given, then everyone would have got right answer. In fact, I would have given this question on homework only. I personally did this question in the class. Why? Because of this expenses. See, everyone knows expenses are to be deducted, but that knowledge you keep in income from other source. But when it comes to deduction, it is that same principle you have to follow, net of expense. Because while including, you follow the principle of net of expense. So deduction is also based on the same principle, net of expense. And do you agree this amount is also gross? The amount which is brought in India? Obviously, this is the expenses you incurred in India. And if you have brought royalty, it is the actual gross royalty you have brought. But that is gross, you will have to make it net. And even this amount is gross, because we found 15% by cross multiplying it with 18% amount, which was gross. So this working was important. So accordingly, see what will be my answer. No, 1, 2, 3. See, this thing I have written just to calculate this 15% based on 18. My formula is 1, 2, 3, whichever is less. And out of the 3, what is less? 1,90,000. So in the answer, 1,90,000. So finish the solution now. First write this and then prepare the working note. Write this thing first. Then copy this working note. Done. Okay, then see one last point of this chapter. Look here. Look, there are 4 incomes which are not eligible for chapter 6A deduction. There are 4 incomes which are not eligible for chapter 6A deduction. Why I will tell you, but see, there is one thing called short-term capital gains under section 111A. What is this?
Selling shares.
See, right now I am not talking about AGDA, this is a general point. If someone says what is short-term capital gains on under 111A? Equity shares. Actually, it also includes mutual fund short-term capital gains, but in mutual fund there are variety of mutual fund. That all I'll explain in capital gains, but in general it is equity shares short-term gain. And in equity shares, when it is called short-term gain, if they are sold within 1 year, then it is called short-term. And what is long-term capital gains under section 112A? It is sale of equity shares only, but sale after 1 year. Then this is long-term capital gains. Others means other than shares. It can be gold, silver, jewelry, etc. And winnings. These are the 4 incomes for which chapter 6A is not allowed. Chapter 6A is not allowed. See here, I am putting a cross mark because chapter 6A is not allowed. And you know reason is what? Look here. See, chapter 6A is a benefit or not? Why? Chapter 6 is a benefit or not? It is a benefit because thanks to chapter 6A, my gross total income becomes smaller. As smaller the income, smaller the tax, and everyone likes to pay smaller tax only. So chapter 6 is a benefit. But you know what law says? Already these 3 incomes are taxed at a low rate. Which 3 incomes? Short term under 111A, long term under 112A, and general long term, they are already taxed at 15%, 10%, 20%. These are the least rate of tax. And already the income is taxed at a concession rate. Sorry, now don't expect chapter 6A benefit. And for winnings, the reason is different. Winnings is taxed at a high rate of 30%. But winnings is anyways income for free. You didn't put any hard work or effort. Luckily, you got the winning. So if income you got free of effort, free of hard work. So you pay full tax. Why you want chapter 6A? See, chapter 6A is for my hard earned income. Like if I am doing job somewhere, I work a lot. If I am doing a business, I work a lot. So when my income is hard earned, so I want deduction under chapter 6A. But winnings is hard earned income or easy income? Easy income. So your government says don't expect chapter 6A. In fact, we want highest tax, 30%. And here the case is different. These are the income taxed at a very concessional rate. So already tax is at concessional rate. Why you more concession in the form of chapter 6A? See, chapter 6A also gives me benefit of tax reduction. But your tax rate is already less. Yes, a doubt will come. But sir, why the tax rate is low on these three incomes? That I told you yesterday. This reason I will be able to explain in capital gains only. Right now I cannot explain. There is the connection with some securities transaction tax. There is something called securities transaction tax in India. So some explanation of that I need to give. Means there are some more explanation involved. Then only I can convince that why these three incomes are taxed at a concessional rate. So reason I will give in the chapter of capital gains. But right now you just understand like this, that already the rate of tax is so low. Sorry, then you won't get chapter 6A. And for winnings the tax rate is high, but government does not want to give chapter 6A. Because this is not income from hard work. It is income without any hard work. So that's why government wants to charge full 30% tax without chapter 6A. So this point is so important. Can you see 5 stars?
Yes.
That when it comes in the question, it doesn't strike only. You know what rule says that you will not get chapter 6A for these 4 incomes, right? So try this point now. Try. A person has long-term capital gains of 8 lakhs. LTCG means long-term capital gains. Income from salary of 70,000. So what is the gross today income? 8,70,000. Okay. Now assume in the question they have given deposit in PPF 1 lakh. Where do we show the effect of deposit in PPF?
ATC.
Deposit in PPF is for lump enters. It comes in ATC. So under ATC, what do you think the limit is? 1,50,000. So this is only 1 lakh. So you will happily minus 1 lakh. And you will say my answer is what? Total up 8,70,000 minus 1 lakh. Your answer will be 7,70,000. From no angle you will feel the answer is wrong. But this is a wrong answer. You know what wrong you did? By deducting 1 lakh for PPF deposit, you have given deduction to long-term capital gains also. Because see, your income is having what? 2 items. One is income from salary and this is long-term gain. And long-term capital gains is not eligible for deduction under chapter. That's what I said right now. See in the previous slide, what did I say? Long-term capital gains do not get chapter 6A. Did you understand that? So you know what I should do? I should forget this amount as if this amount is not there only. Actually in this sum it is there. But in your mind you should feel, no, this is not there only. This is not there only. So what is the only income? 70,000. Now 70,000 you will deduct maximum what? 70 only. When you included only 70, so your deduction will be restricted to 70,000. So even if you deposited 1 lakh in PPF, you will restrict it to 70. Because now if you minus 1 lakh, you know what you will do? You deducted this 70 also. And you deducted some amount from 8 lakhs also. And this 8 lakhs, not even a single rupee should be cut from that. This 8 lakhs should remain as it is at gross level. See, anyways, we call it a GTI. So keep it like GTI only, gross. Don't cut even a single rupee. So yes, income from salary is eligible for chapter 6A, but that is only 70. So worst, max to max, how much I can take? 70. So even if I have deposited 1 lakh in PPF, I will not get 1 lakh deduction. Although 1 lakh in PPF looks within the limit of ATC of 1 lakh 50. In ATC, what was the limit? 1 lakh 50. So as per 1 lakh 50, you will find 1 lakh is okay. But see this also. My income which is eligible for chapter 6A is only 70. See, best technique is what you know. Whenever in the question you come across these 4 income, you should hide it. Hide it means like this. See the way I am hiding. Literally you will not be able to do like this. Means hide it. Assume it is not there only. Actually it is there. See. But in your mind should work like this. So I have got only 70,000. So 70,000 you can minus 1 lakh from that. It is 70 only included. You cannot minus 1 lakh. So how much you will minus? 70,000. So see here. Although ATC PPF deposit was 1 lakh, which as per the limit of ATC sounds within the limit of 1 lakh 50. But still I will not take 1 lakh. It will be restricted to 70,000. Okay. So accordingly my answer will be what? 8 lakh 70 was the gross today income. Minus this 70, answer will be 8 lakhs. So technique is this only. Always hide which amounts. Hide means not literally hide. You have written in the answer, you can see. But in your mind you have to keep it hidden. That as if these 4 incomes are not existing only. Because if you see that amount, you will be tempted to minus. And every time you will not be able to realize, oh my God, these are the income which are not eligible for chapter 6A. Because when you are solving the sum, you are just seeing the amounts. And looking at big amounts, you feel like minusing. But in the big amounts, if these amounts are there, consider as if they are not there only. Which amounts by heart? Short term under 111A, long term under 112A, other long term and winnings. These income you should literally feel as if they are not existing. And all other incomes you minus as much as you want. But in a case my other income is only 70, at the most I can minus only 70. Okay, now try question number 7. Question 7 you try in front of me right now. Question number 7. In front of me you try right now. This question is dedicated for the knowledge which I gave right now. Okay, up till one level we will solve together only. Let us read. When the challenging point comes, I will ask you to try, okay? Read. Mr. A, resident individual, age 61 years, means senior citizen. Has earned business income, computed means it is ready-made answer, 1,35,000. And lottery income is winnings, 1,20,000. Wait, the previous year is wrongly written here. Huh? Did you realize the printing mistake? Our previous year is 23-24. So this is a misprinting. Okay, then he also has interest on fixed deposit with bank. You know, senior citizen getting interest from any account of bank or post office. You will get 80 TTB. TTB is for what? Interest income of any account from bank or post office. So here it is a fixed deposit, but it's okay, any account. It should be with bank or post office. Here it is with bank. Maximum is 50,000, but here it is only 30, so you will take 30. Then he invested 1,50,000 PPF. Do one thing, you can also write this. Just write this. There are two chapter 6A items. One is 80 TTV, other is 80 C. So prepare the statement. Statement of total income. Statement of total income. Our answer is statement of total income. And out of 5 heads of income, we don't have income from salary, income from house property, but we have income from business. See, I have directly written income from business. But when I give you homework, you write the full format. Write all 5 heads. If not there, put nil. So income from business, then anything from capital gains we don't have. Then income from other sources we have 2 items. Which 2 items we have?
Winnings and interest.
Lottery income means winnings,
Fixed deposit.
and interest on fixed deposit is bank. Remember DW Ramu Fakir? In DW, W stands for winnings, and in Ramu Fakir, I for interest. So see, your interest income is there. See, income from others, so chapter gets useful everywhere. That's why I started first with income from other source. Is this correct? 2 things, income from other source. Then gross total income 2,85,000. After that, deduction under chapter 6A. Okay, now wait. Make a rule. What rule? If in the question you find these 4 incomes, which 4 income?
STCG under section 111.
STCG under 111A, LTCG under 112A, other long-term gains and winnings. Whenever these 4 incomes you see in the question, you have to be very careful in chapter 6A. And in the name of care, what care you will take, just hide this income. So see, from this 4 income, what do we have anything in our question?
Yes.
We have winnings. So see what I have done, I have highlighted with a different color. Or see, for better explanation, see what I am doing, I am hiding it. See, for you it is not possible to hide. But in your mind you can do anything. See, I have hidden. Now best is what you imagine as if winnings is not there only. We have got only 2 items which are chapter 6A deductible. So my language, we have got only 2 items which are chapter 6A deductible, which are eligible for chapter 6A. Okay. And the total of that is what?
160,000.
So maximum 1,65,000 I can get. Although I have got some other income also, but that other income I cannot reduce even by a rupee. See, other income I have got lot of winnings. but other income I cannot touch. So at the most I can touch these two incomes. And which candidates we have in chapter 6a? We have one ATC
And 80
and 80 TTB. And don't forget, at the most we can minus 1 lakh 65. So tell me, in ATC what we have? PPF. Check in the question. What is the amount of PPF? 1 lakh 50. So 1 lakh 50 is not a problem. Up till now it's not a problem because we can take 1 lakh 65. Did you add 135 and 30? 1 lakh 65. So 150 is not a problem. This I can nicely take. But then in 80 TTB, now how much is left? From 1 lakh 65, 150 is gone. So only 15. But actually for 80 TTB, we have got full 30,000 eligible. But then I cannot take 30,000, although 30,000 is within the limit of TTB. What was the limit of TTB? 50,000. So as per that 50,000, it sounds okay. But then if I deduct your full 30,000, what will happen? This amounts have vanished, even winnings will get reduced. So since already 1 lakh 50 I have deducted, so at the most I can deduct only 15,000. See, mentally you should make limit whichever is less. So although for 80 TTB there was 30,000 which was eligible, but why did I restrict to 15 only? Because at the most my deduction can be 1 lakh 65. And from 1 lakh 65 already 1 lakh 50 has been taken with the help of 80C. So 1 lakh 50 is gone. So I am left with only 15,000. So see the way I have done here. See, in TTB there is a limit of maximum 50. But our actual interest is 30,000. So I was planning to take 30. But why did I cancel then? Immediately I realized that at the most I can minus 1 lakh 65. See, chapter 6a cannot exceed your income. Your income only included is 165. So chapter 6a will remove 165. And out of 165, this PPF has already taken 150 away. So I am left with only 15. So only 15 will come. So present like this. Now I will see the reality. In reality, I have this amount. But government doesn't allow me to touch this amount. See, government is saying that only you cannot get chapter 6A, means don't touch that amount. Keep it gross only. See, his doubt is what you know. Sir, why did we take 80C first? You can take anyways. You could have taken 80 TTB first. Tell me, let me complete this doubt also. Tell me, what if I would have taken 80 TTB as first?
30,000.
See, I have, at the most I can minus 165, okay. And if I use 80 TTB first, so 80 TTB how much I can take? 30,000. So 30 is gone. So 1 lakh 35 I can take from 80C. Anyways you do, it's okay. But since we do 80C first, I did 80C first. Otherwise there is no sequence. One thing is important, that your income itself is 1 lakh 65. Deduction will be restricted to 1 lakh 65 only. But see, this is so sensitive point, you know, it will not strike on exam day. Here I am doing this by announcing this point and explaining this point along with you. You are not realizing. But in exam, how it will strike? So best way to strike is what, you know, just remember when you are doing chapter 6a, this scene should come to your mind. That if I have these 4 incomes in my 5 heads, I will hide it. I will not touch it. Other than this, other incomes I will reduce as much I want. But these incomes do not touch. When you are doing chapter 6a.
Sir, while while writing an exam, you will directly write 15,000.
Yes, see, you can write, you can do like this. You can directly write 15,000. At the most, you can write a note that deduction is restricted to, means you can write a note, deduction is not allowed for
Winning.
winnings. That's why 80 is restricted to 15,000. Otherwise, see, tell me, if you take 30,000, your this answer will become less. And this is winnings only, see. Eventually what happened, whatever was the winnings answer, it came in the final answer. Because government will not allow you to touch winnings amount. Not even a single rupee should be cut from that. It should remain gross only. So 120 gross, it should remain as it is. Done this thing? Okay, then see here. Remaining questions are for homework. Which questions are remaining? 9, 12, 13. That's it?
सर 13 में पूछना है
No, for homework question, don't ask me the doubt right now.
कॉलेज की ट्यूशन की लेते हैं कॉलेज
Do homework question, I will discuss only after you solve. You think if I tell all the answers in advance, then you have to do a clerical work. And anyways, your doubt doesn't deserve the answer also, because I had explained. I had explained this point, but still I will explain again while I discuss. See, he has a doubt relating to question 13. But in my homework, my policy is what? First you try. Neither discuss with me nor with your friends. First you try as if it's your exam. And if you are stuck up. You will be stuck up now, but at least you will not stuck up in exam. And I will discuss. Again you are discussing with your friend.
I'm not discussing.
Don't discuss. Answer I will discuss in the next lecture. Okay. So your homework is question number 13. Then 12 and 9. 9, 12, 13 homework. 9, 12, 13 homework. Okay. Please do the homework and come.